am I buying a good deal or not? How exactly do we go about qualifying and figuring out if I buy this firm, am I buying a good deal or not? This is going to be a very quick calculation that you can go through almost live as you're talking to a firm owner to just quickly see, is there enough profit here for me to make sense or not? Guys, don't go buy a firm just for the sake of buying a firm. There's a lot of them out there, and you're going to ultimately end up doing one of two things. You're going to make decent money, but you're going to end up doing all the work yourself. Or you're going to buy something where you're not going to have much left at the bottom line, and you're like, why did I even take this project on? So this is how it looks. You got to start off with the profit. From there, we got to back out debt service. Now, debt service, we're just going to use a super basic rule of thumb of 15%. So with 15% of the purchase price, you're going to be able to figure out on an annual basis or monthly, if you chop it by 12, how much am I paying in debt every single year? $1 million firm, I'll be looking at about $150,000 a year in debt service. This is just a really quick way to get you there. So we're going to start off with profit. Then we'll back out debt service, which is purchase price times 15%. From that number, I want you to back out an additional staff salary. In my community, I preach and teach a core fundamental principle. We buy businesses, not jobs. And for that reason, we have to make sure that we're not inheriting something where we don't have the staff to be able to go do the work for us. Now, are you going to have to work 10, 15 hours a week in this new firm that you buy? Absolutely. But I want you working on the business, not in the business. I don't want you preparing tax returns and compiling people's books for them. I want you working on creating efficiencies, professionalizing the place, tech stacks, all of those things, and adding new staff. So I find that I would back out about $75,000 a year for one additional staff member. Now, I can already hear some of you,
Oh, CJ, that's not enough money. It costs $125,000 to $150,000 where I'm at.
look, adjust that number for where you're at. But the fact of the matter is, I know personally from the firms I've bought, I know you can get a good EA for $75,000 a year remote. So maybe that's physical, maybe that's remote, but you can find an EA or a bookkeeper for $75,000 a year remote. And just so you know, you are very attractive when you post your job out there on Indeed or whatever, and you put that remote tag on there. There are a lot of companies that are trying to get people back physically into the office. So when you post that job with remote, you are going to be extremely attractive. The last job I posted for NEA probably got me 50 to 60 applications with about 4 or 5 pretty solid candidates with 5+ years experience. Anyway, back to the formula. So now at this point, this is when I would say this is the cash flow that's remaining for me. I got my starting profit. I'm going to back out debt service. I'm going to back out another additional staff member. And then I'm going to say, okay, this is what I could reasonably make buying a firm. So take $1 million. Let's say they're making $400,000 on the bottom line. $400,000 minus $150,000 in debt service. Now we're at $250,000 in cash flow. Back out $75,000 for an additional staff member. And now we are at $175,000 in free cash flow that will go to you every single year. More importantly, that's about $15,000 a month that's going to go in your bank account. This is a very quick cash flow calculation that you can use to quickly say, this is worth it, it's not worth it. If you run the formula, guys, and you're ending up with $3,000 on the bottom line a month, it might not be worth it. There's a lot to go into this. So if it's not worth it on the bottom line, if it doesn't meet your desired cash flow needs, then move on. Focus on the firms that are going to get you the cash flow that you want. Remember, guys, FOCUS is an acronym. It stands for follow one course until successful. You got to hone in. You got to become obsessed specifically with the avatar and the profile of an accounting firm that you need. Don't waste your time on a $200,000 revenue firm if it's not going to meet your needs. And also don't waste your time on a $2 million revenue firm if it's going to be too big for what you want at the moment. Guys, if you want to learn a little bit more about buying an accounting firm, I have a simple flow chart that's going to give you 7 deal breakers that if you're looking at a company and they have any of these, you need to run away from it. Comment 7 down below and I'll shoot you over the link to that free flowchart. I know it's going to help you. Now, look, full disclosure, guys, I can't cover every single scenario out there, but this flowchart will keep you in the safe zone while you're out there looking for an accounting firm. Also, if you're really serious and really wanting to learn more about buying your first firm, I have an amazing community with a bunch of CPAs, accountants, and tax pros who are buying their first, second, even third acquisition at this point. It is an amazing private mastermind. The synergies inside that community are amazing, second to none in my opinion. If you want to learn what this would look like for you and how you can take the first steps to getting control back of your life, not living every minute for a client or every minute for a boss, there's another link down below. You can book a call with me. Let's talk a little bit. Let's see how we can get you in and start building your vision and ultimately getting your time back. Guys, we don't get a second chance at life. There's no reset button. Make sure you're spending your time with the people that you love and doing the things that you love. That's what buying a firm did for me, and I know that that's what it can do for you. And remember, it's a cruel world, but we're better together. We'll see you later.